answering the question, how exactly do you value Bitcoin? And I think this is a question which we perhaps get the most, and perhaps a lot of you have been wondering about yourself, because for any asset which one isn't familiar with investing in, the question of valuation naturally comes up. This is the case for startups, and this is the case for commodities. And especially given that Bitcoin is a totally new asset class, the question of valuation becomes extremely important, especially when we look at how the price has risen from about 6.5K to $9,000 in the last few days. So this is what we'll tackle. So just take a step back. So most people in this room are familiar with the different valuation models for stocks or commodities. So for stocks, a lot of analysts, slaved away doing their discounted cash flow models to better understand how a company can be represented as the net present value of its future cash flows, for example. And there are different metrics aside from discounted cash flows for stocks, such as relative value, P, price to earnings ratios, etc. And for commodities, it's a bit different because obviously commodities don't have cash flows in the same way, but rather for something like gas, a gas analyst could understand the value of gas over time by modeling on a macro scale what demand and supply would be like during different seasons. And you can also tackle commodity valuation by looking at the costs involved in creating that commodity for gold or for oil or anything like that. But Bitcoin in many ways has more similarities to a commodity than a stock, for example, given that Bitcoin doesn't have cash flows in the same way that stocks don't, commodities don't have cash flows. But we identified three main ways we can start to understand valuation for Bitcoin. And this is what we'll talk about today. So one, market sizing. Two, cost basis analysis, so understanding the average prices at which people bought Bitcoin for. And then three, just looking at supply and demand and how those dynamics change. And this is where we'll talk a bit more about the halving. So I think the first question people have fundamentally when they want to understand the value of Bitcoin is, why is Bitcoin worth anything? And our thesis for why Bitcoin is worth anything in the first place is the fact that we see Bitcoin as a modern day digital gold. In the same way that people have been pinned their money, their long-term holdings into gold for thousands of years, and hold gold especially due to fears about losing their fiat monies, cash, or being fearful of losing their long-term wealth, that they don't keep it in a hard asset. We believe Bitcoin has a lot of the same fundamental properties as gold, such as its fungibility, such as its finite and predictable supply, which means that we see Bitcoin going forward potentially capturing a lot of the value of store of value assets such as gold. And I think this market sizing diagram goes a good way to show that. For example, so Bitcoin's market capitalization today is around 168 billion. The total value of gold on Earth today, if we take gold's current spot price, would be around 9 trillion. It's hard to get an exact estimate because obviously gold comes in many shapes and forms, but gold.org estimates at 9 trillion. And the S&P 500's value at the end of 2019 was estimated to be around 28 trillion. So we can understand, especially if we just see Bitcoin as an alternative to gold, that over time, Bitcoin could, in theory, come to capture a lot of the value currently placed in gold as more and more people, especially millennials, seek to Bitcoin as a store of value instead of gold. And a lot of research has been done to show that more and more, especially the young generation, decide to store their value in an asset such as Bitcoin rather than gold. And Bitcoin's current price is around 8.7. One can understand that if it were to capture maybe even half of gold's value, about 4.5 trillion USD, 4.5 trillion USD, should I say, that this could lead to a 20-fold increase in Bitcoin's Bitcoin price over the long term. And this is just an easy exercise to see that if Bitcoin is indeed a replacement for gold as a store of value, these are the kind of ranges of values we can see Bitcoin one day being worth. So this answers the first question. And moving on, so we've talked a bit about how market sizing can help an investor understand what Bitcoin's fundamental long-term value can be. But there are also ways to understand how Bitcoin's price in the short term, especially during volatile periods, can change over time. So this section is called How to Spot the Bottom. So a fundamental metric we like to use as a research team to understand where the bottom of a potential Bitcoin bear market is called the network value to realized value ratio. And we can understand this as a sort of cost basis analysis for Bitcoin. It takes the ratio between Bitcoin's current price and the average estimated price at which the sum of all Bitcoin addresses received their Bitcoin at. So as people know, Bitcoin's blockchain is something that can be visibly seen by anyone in the world. And so we can work out the time exactly when every single Bitcoin was last transferred to a new Bitcoin address or a Bitcoin wallet. And we can use this to calculate an average cost basis for Bitcoin. And this equation more or less just sums up what the ratio is. And the cool thing with this ratio, it allows us to work out exactly when Bitcoin's current price is around the same as Bitcoin's cost basis. So the average price at which the entire world bought Bitcoin at. And these times are when the ratio is below 1. And we can see that 2 periods, extended periods, where the ratio was below 1 in the last 3 years. The first was during January 2019, and the second was during March 12, 2020. And what these periods have in common is that they both represent the bottom of Bitcoin's bear market. So some of those who have been in the crypto market for at least a year or two will remember that after the bull run of 2017, Bitcoin's subsequent bear market came to an end around January 2019. And this is exactly when Bitcoin's NVRV ratio was below 1. And then most people will realize this was the same case in general capital markets and Bitcoin. In March 12th, Bitcoin's ratio also fell below 1 as Bitcoin experienced a flash crash in line with the rest of capital markets. And both of these occasions would have represented excellent times to buy Bitcoin, because in both cases, in 2019, Bitcoin's price rose from 3,000 to over 10,000. And from March 12th to now, Bitcoin's price have risen from about 4,000 to about 8.5 thousand. So this metric has generally, for the research team, been a great way to understand how Bitcoin's market dynamics and how the bear market can come to an end better than any others. And it's proved extremely reliable. So if there's one metric we can suggest other people have a look at, we would suggest this metric be one of those. So now moving on. So as we mentioned before, we see Bitcoin's fundamental value as being allowing people to transfer value and store value across the internet. So a metric called the network value to transactions ratio, the NVT ratio, is quite famous for allowing people to better understand how good Bitcoin's fundamental traction is going on that metric, and then also work out whether the market is pricing Bitcoin at a premium or a discount based off its ability to transfer value across the internet. So this ratio measures the relationship between Bitcoin's market capitalization and the US dollar value of Bitcoin transferred on its blockchain. So just to state this again, the blockchain is an open database which allows people to transfer money between each other. So to calculate this ratio, we would take all the dollar amounts of Bitcoin transferred in a single day, which is often in the hundreds of billions, and then we would divide that by Bitcoin's market capitalization on any given day. And we can see this as in some ways analogous to a P ratio for Bitcoin. Even though Bitcoin doesn't have earnings per se, in the same way that the P ratio allows one to measure the ratio between the market's current pricing of a stock and the stock's fundamental earning value, we can see this NVT ratio as allowing people to measure the market's pricing of Bitcoin compared to Bitcoin's utility as a medium for transactions. So we can look at this metric since the start of this year up until now, and we can see that Bitcoin's NVT ratio is actually at one of the lowest points it's been this year, which signals that, at least taken within the smaller time frame, the market seems to be pricing Bitcoin at a more steeper discount based off the amount of transactions and its usefulness as a transaction medium than it has done in the past, which signals that, okay, despite the fact Bitcoin's price may seem like it's at a relatively high level, one could argue that based on this factor alone, it seems to be priced more fairly than it has done at any other point in 2020, based off this metric. So now moving forward, so I think a final metric we want to discuss, especially in the context of the halving, and for people that have attended previous sessions of this, is the concept of the hash rate. So we've talked a lot about what proof of work is. Davide gave an excellent explanation about this a few weeks ago. But as people know, Bitcoin is mined by miners who use that electricity to solve complicated lottery equations, which allow new Bitcoin to be created and then also allow for transactions to be verified. So the hash rate metric is what measures the amount of competition or the amount of electricity which has been dedicated to mining on Bitcoin at any given stage. And the higher this metric is, the more certain we can be of Bitcoin's long-term economic security. Because as we said before, proof of work mining is essential to ensuring that Bitcoin functions as it should be. And the higher this metric is, the more certain we can be that this is going to be the case. So as I said before, the higher the metric is, this suggests that miners are willing to spend more capital to mine Bitcoin and verify transactions. And when we understand what incentive miners have for verifying transactions, it's namely that they know that they're going to be rewarded in Bitcoin. So we can understand that a higher hash rate metric means that miners have positive expectations of the present and future value of Bitcoin that will receive as rewards. And so even if they don't necessarily think, even if they know they'll receive X amount of Bitcoin today when they mine, they also know that potentially they could hold this Bitcoin for a longer period of time and the price would appreciate. So I think we're going to give two examples. We talked a bit a few weeks ago about Bitcoin Cash, which was a spin-off of Bitcoin with much weaker fundamentals. And we talked about how on 8th of April, Bitcoin Cash had its own halving. And as one can see, in the lead up to Bitcoin Cash's halving, which I just want to remind you guys is a different crypto asset from Bitcoin, Bitcoin Cash's hash rate was on a slow decline before massively dropping on the day of Bitcoin Cash's halving. But if we see what's going to happen or what's happened to Bitcoin in the run up to Bitcoin's halving, we've seen that Bitcoin's hash rate, whilst volatile, doesn't show any demonstrable upward or downward trend. And maybe it's slightly upwards actually since the start of January 2020, which shows that miners for Bitcoin have a fundamental different expectation of Bitcoin's long-term value, that they're willing to continue mining on Bitcoin despite the fact their reward is going to be cut in half, which isn't the same for pretty much any other crypto asset, which isn't the same for Bitcoin Cash, and which isn't the same for other spin-offs of Bitcoin. So this is a metric called the price-to-hashrate ratio, which I think is quite useful and is one we worked a lot on internally in the team to understand the relationship between Bitcoin's current market valuation and its fundamental hash rate economic security variable. So as we can see, we've plotted the price-to-hashrate ratio for Bitcoin Cash and Bitcoin Cash and Bitcoin SV. So just a reminder, Bitcoin Cash and Bitcoin SV are spin-offs of Bitcoin. And as we can see, relative to Bitcoin, both Bitcoin Cash and Bitcoin SV became relatively overpriced as a function of their hash rate immediately following Bitcoin Cash's halving. And Bitcoin has remained relatively stable when priced according to the price-to-hashrate ratio, which means that even though Bitcoin has seen an increase in price in the last few days, this has been met by an equally increase in the hash rate variable for Bitcoin, signaling that Bitcoin's fundamentals haven't at any point massively become out of tune with its market price, which is a positive signal for Bitcoin, especially in the run up to the halving. So this has been a lot, and there's a lot more fundamental metrics one can use to understand Bitcoin, but we find these the most simple and easy to understand for people wanting to become more familiar with Bitcoin. So as we said before, we looked at 4 metrics today: the market sizing comps, network value transaction value ratio, network value to realized value ratio, and Bitcoin's hash rate. These all help people understand Bitcoin's demand and supply side dynamics a little bit more, and can better understand, can help investors better understand whether Bitcoin's current price is overvalued or undervalued. We hope that you have found this relatively useful, and we're happy to set up further calls with the research team with anyone that wants to learn a bit more about different ways to value Bitcoin.